The Morgan Report with David Morgan.
David Morgan of themorganreport.com for the week ending 4 November 2022. Well, it ended as an interesting week as far as the precious metals are concerned. As we can see here on the Kitco display, gold is up over $50, over 3%, silver up over 7%, touching close to 21. Both platinum and palladium had big moves in the 4% arena. So quite an end of the week, and this comes after gold had hit something like, I think, a 2-year low just a few days back when the Fed raised interest rates 75 basis points again. So as I have harped on, these interest rates do have some effect on gold. It's kind of a knee-jerk reaction. But the real truth is that raising interest rates will not really affect the gold price in the longer term until it's above the inflation rate. So if the inflation rate's 8 and we get to 4 or 5 or 6, it could affect the gold price temporarily, but really wouldn't have a big effect. And I think all of you that listen, at least what I speak about, know from the Volcker years, it took Paul Volcker to take those interest rates well beyond the inflation rate. And it worked. But it's impossible to take them that high this time. So first up is from Tyler Durden, Zero Hedge. Gold market roiled as mystery buyer waves in 300 tons. You can read this article. It's worth reading. I'm going to follow up on this with another one. I'll post here in just a moment. But always good to read Zero Hedge every week. Another article from BNN Bloomberg. Who are the mystery buyers responsible for a central bank gold boom? Central banks bought a record amount of gold last quarter as they diversified foreign currency reserves, the large chunk of the purchases coming from as yet unknown buyers. Almost 400 tons was scooped up by central banks in the third quarter, more than quadruple the amount a year earlier, according to the World Gold Council. That takes the total so far this year to the highest since 1967, when the dollar was still backed by the metal. Those that follow me closely know that I've said the run to gold has begun. I made that statement probably 6 months ago. And you have to look for the subtle clues. Just because the run to gold has begun does not mean that the price reflects it instantaneously. And I've given the analogy or the metaphor that the run to gold will be a very light walk, walking, almost dragging your feet, then a normal walk, then a brisk walk, then a small jog, then a normal jog, then a fast jog, then a run, then an all-out sprint. That metaphor is what will happen as the run to gold progresses. But again, I think this is some proof of my statement being accurate. All right, this is going back what I said earlier. Gold at a 2-week, I said 2-year, forgive me, as low as Powell quashes the dovish pivot hopes. Basically, what we already said, gold got sold off with the interest rate increase, and then the next day, today, they shot up. Something everybody knows, Invez published this physical silver drawdown surge on global bullion exchanges. Physical withdrawals from bullion exchanges have reached historic highs. The silver prices continue to decline despite the shortage of the underlying asset. Renowned analysts expect silver to be the trade of the decade. So you can read this article. Talks about several things here, and they quote several here. I'll just read a couple. According to the 2013 report, the LBMA and the London Platinum Palladium market, in 95% of transactions, contracts are rolled over and no physical delivery takes place. Physical metals are generally not exchanged at the metals exchange. So I'll just add on to that. When metal is coming off the exchanges, the COMEX and the LBMA, normally that is an indication they can't get it anywhere else. And they can't get it, more difficult. COMEX is sort of like the stockpile of last resort. It's only for display purposes. It's a derivatives market. When you buy a silver contract, you're buying a piece of paper. Yes, in certain cases, you can take that piece of paper and exchange it for physical metal. We're well aware of that. but the amount of paper versus the amount of metal is a mismatch, and we all know that. So it's going to be interesting. Everything's lining up in silver's favor except for the price. But again, today's 7% move. I've seen a couple of these. What's interesting when you're watching a market move opposite to what it's been doing. So silver's been going sideways to down for some time. But when you see the up moves percentage-wise are greater than the down moves percentage-wise on big moves, and that's what we're seeing. We saw, I think it was a 5% move not that long ago. When you see that, it's a good indication that the bulls are going to be in charge rather soon. Couple more here that are really worth talking about. Around 95%, give or take, of gold owned, not traded, owned across the globe, is unallocated. This is a staggering statistic. A similar mechanism is in place for silver. Think about it, people. If you've got an unallocated silver account or gold, you better rethink it pronto and make sure it's allocated, or better yet, segregated. There's a lot going on in the metals markets. Some of it I can't talk about, but let me bring one up for your attention. I've been doing a fair amount of consulting with clients that have metal at First State Depository. And the First State Depository is in receivership. Welcome to the website. Established by the court-appointed receiver Kelly Crawford. Mr. Crawford was appointed as the receiver by the United States District Court for the District of Delaware, the receivership court, in a lawsuit brought by the Commodity Futures Trading Commission against defendants First State Depository Company, LLC, and Robert Leroy Higgins in case 22-1266. The purpose of this website is to provide information regarding the receivership to persons or entities who did business with the defendants. So another one bites the dust. Is there silver there? Yes. Is it a match to what has been deposited by the people that believe it, people and entities? No. These things take a long time. I've been involved in this market a long time. In fact, I'm not afraid to say it. My own father got in a situation like this many, many, many years ago in the 1980s bull market, or running up to the 1980s top. And I had warned him again and again and again not to do it, to move it, to get out, to do something different. But nonetheless, he didn't. So it affected these gold purchase. So not to dwell on personal stuff, but the old buyer beware, yeah, and depositories, you really got to check them out. I have a few recommendations. I'm not going to say it publicly. I am getting some consultations, and I'm not asking for more. I deliberated very much if I should even put the tab back up on the website for consultations. I decided, yes, I needed to because of what's happening. And I upped the price because you usually get what you pay for. And hopefully those people that are consulting with me are, all of them so far have given me feedback that they certainly believe they're getting what they're paying for. And I think I'll close out with this one. The COMEX statement in February 2021. In an effort to represent a conservative deliverable supply that may be readily available for delivery, made a determination to discount from its original estimate of deliverable supply 50% of its reported eligible silver at this time. This means that the bars were considered to be available for redemption were just halved. To break this down just a little bit, eligible silver is in conformance with regulations for good delivery. This means that if someone wants to pull physical silver out of the market, the eligible silver would be of good enough quality to meet the necessary specifications. However, eligible silver does not have any such warrant issued with it. That's key. That means that the long-term holders of physical silver have no obligation to return the silver to the exchange when the contract holder wishes to collect. Indeed, the long-term holders likely believe that the physical value would keep on appreciating, and at a time of shortages, it seems unlikely that these resources would be sold out without a hefty price rise. To make matters even worse, Surveys conducted indicated no clear consensus as to how much silver is dedicated to long-term investments. My guess, and I'll say guess, is probably 70%, but or more. Could be 90, but I am biased, but I've also been watching this market for decades. Regardless, let's read on. So the exchange has acknowledged that it does not know how much physical silver will be available for release if market participants decide to go in for physical redemptions. This is both because there are too many contracts in the first place. What? Too many contracts in the first place? And that much of the metal, which is counted as eligible for delivery, will never be registered. Registered products are those that are readily available to investors who want bullion delivery. And I'm just going to press on a little bit more of the intense drawdown. I think you've all seen this. Many people that comment on the silver markets have shown this, and it is quite something to look at. This is the drawdown in silver from January, basically 2021, around 150 million ounces in the registered category, and now we're around 35 million. And the slope of this is pretty impressive. And of course, I've mentioned that I've seen it down to 35 million ounces. You see over here, 2018, I mean, looks like, right around 35. I've seen it there a couple times. And then, as you can see from this chart, it went from that low and just went up, 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 flattened out and up, up, up. Will that happen again here? I have my doubts. We are watching carefully. So I'm going to call it there. I did finish the November issue of the Morgan Report. We did a site visit on one of the silver projects in the great state of Nevada, and we wrote it up. And you can see the comments for our premium subservice. Also, some comments on what's going on with diesel, the energy market, silver, of course, gold, and company updates, etc. So, if you're so inclined to really get involved in this market, you might consider a subscription. Furthermore, I wish to state that I will be participating at the Red Pill Expo in Salt Lake City on the 12th and 13th of November. This is David Morgan of themorganreport.com. Till next week, remember, there's nothing more powerful than the truth.